all, the FTX SBF fraud case to catch, coincidences between our public servants, the destruction of crypto in the United States of America, which again, I believe was 100% pre-planned, and of course, the comedic relief in the bear market of how stupid this all is. Because again, it could have been avoided if the likes of Gary Gensler from the SEC would have actually done his job. You know, our taxpayer dollars fund his salary. Anyways, let's direct our attention to Caroline Ellison and her testimony in the case. Caroline was Sam's former girlfriend and former CEO of Alemeda. She was given this position August 22, only 3 months before the collapse. As expected, she is turning on Sam for immunity, and this is going to get juicy and, of course, ironic. Make sure to like, comment, subscribe, set alerts. Anyways, from CoinDesk. According to Caroline, accountants couldn't or wouldn't audit Alemeda. Alemeda engaged with a few accountants in 2021 to 2022, but after those firms reviewed Alemeda's books, they found they couldn't or wouldn't do it. Ellison said as she faced questions from Cohen, former FTX Markets CEO Ryan Salami, initially prepared Alemeda's balance sheets, but at some point Ellison took over the task. She testified, "This also to me makes no sense at all considering who Sam's father is, his professional career. Joesph Bankman is an attorney and clinical psychologist from Stanford and focused heavily on taxes. From the Stanford website where he taught, written on how insights from social psychology might be used in the effort to reduce tax evasion. He also endorsed a tax-related bill for Senator Warren in 2016. He also taught at Stanford and Yale, and here's a little bit more from his bio via Stanford. Taught tax policy covering topics such as progressivity, consumption tax, and the role of tax in structure of Silicon Valley startups. He had gained wide attention for his work on how government might use control the tax shelters and testified before Congress and other legislative bodies on tax compliance problems posed by the cash economy. He has written and spoken extensively on how we might use technology to simplify filing." This is all interesting because FTX was a startup and it was a tech company. Again, you guys, Joesph was also on the payroll at FTX, Alemeda's sister company. His salary was $200,000, and from the SBF case, it was found out via email he pressed employees to give him $1 million salary. My question to you is, how did Joesph not intervene? How did he not know? And why did he let his son fail? Thus far, Joesph is not in any trouble, just Sam. And again, I believe many events are lining up. And I also believe that the FTX collapse was 100% intentional to force harsh regulations in the USA. Lastly, follow the money. And of course, make sure to like, comment, subscribe, set alerts. And thank you so much for watching the O Show. Bye-bye.